the May Accounts Receivable Core Committee. Hope you all are doing well, enjoying the sunshine. And I have started the recording, so we will have that available within a few days on our website. My name is Gerald Floyd. I'm the statewide Accounts Receivable Management Coordinator here at DAS. Just a couple of housekeeping things. I know a couple people logged in as a guest. If you could add your names in the chat just so that I can have that for the minutes and the attendee list, that would be helpful. That way I make sure and get everybody's attendance recorded correctly. I suspect that we won't need all of this time for today. It's some of the items on the agenda. I kind of guessed on the high side as to how long that they would take, but I'm sure most people don't mind if we get done a little bit early. First on the agenda today, we wanted to share that we will have our LFO/year-end AR training on August 17th at 10 o'clock. We'll be in the Labor and Industries building, conference room 260. For those of you in the Salem area, you might have been there in the past, but we will have that meeting there. We will record that training and post it on our website, where the training from last year is currently located under the AR resources. So if you're not able to attend, or you're in the Portland area, don't want to make the trek down, certainly understand that. You will be able to watch the recorded version, just similar to years past. We would have you email us once you've completed that training, and that way we can mark you down as having that completed, since it is an honor roll criteria item. So we will be having the live in-person training, kind of trying to get back to that for those that have done this before. You probably have attended that pre-pandemic, so we're trying to get back to some in-person opportunities to meet, and that way people can ask some questions and so forth as we go through that year-end training. Don't expect to have a ton of different information than what's in the past. There's no significant, well, I shouldn't say any changes to the actual LFO reporting. We'll just kind of provide some updated examples and scenarios in the training, and things like that. So, nothing to worry about. There's no new things to have to capture this year. So don't worry about that. It's just an opportunity for us to make sure that we're sharing the information about what needs to be reported, where, the format for how that data gets reported, etc. So August 17th, 10 a.m. Mark your calendars, and we'll hope to see you there. Any questions before we move on in the agenda?
What was the location again?
It's the Labor and Industries building in the Capitol Mall.
Okay.
And I will send out announcements on the listserv as we get closer, that'll have information with the specific address and parking situation for those that aren't in the downtown Salem Capitol Mall buildings already. So that all that information will come via email. So we just wanted to let people know to put it on their calendars so that they can attend if they want to. So otherwise, like I said, it will be recorded. Okay. So next on the agenda, fiscal year-end AR preparation. This is something that around this time of year we like to kind of go over with folks, reminding them things like your write-offs. If you have accounts that need to be written off, you're kind of coming to that last few weeks of the fiscal year and start reviewing those accounts, especially if they are in an RWO status at DOR and you plan to write them off. This would be a good time to start looking at that, documenting that criteria for your records, getting those entries made using the if you're an SFMA agency, you would use the MPCD field to record the 3-digit code for the write-off criteria. That helps us as we're pulling information for the enterprise reporting that we do to kind of take the total write-offs that are in the LFO report and break down for the legislature what are the most common reasons for the write-off to occur. We use that 3-digit code to do that. So just a reminder to start looking at those. Make sure you have a chance to get those entries in. I know that you can still make entries to June. I think the hard close is like August 11th, if I'm not mistaken. But obviously, the sooner you can get that done, you got probably plenty of other things on your plate to get to as far as year-end accounting goes. So this is one thing you can get done early, hopefully. Second, in preparation for year-end, I wanted to remind everyone to review your liquidated and delinquent accounts that would be subject to assignment under OS 293231. Make sure that if they have not had a payment for more than 90 days, that you are getting those accounts turned over to the Department of Revenue Other Agency Accounts Unit. You should be doing that on a regular basis, but again, kind of thinking of year end, we want to show that those accounts have been assigned so that you don't have to report any accounts as unassigned, non-exempt with no payment for more than 90 days. So this would be a good opportunity to start reviewing those accounts and getting those assignments completed so that they are there and you don't have to worry about that as part of your year-end process. So those were the reminders that we had for year-end. Does anybody have any questions? Seeing none. For our next item on the agenda, legislative bill tracking. Hopefully, if I'm sharing correctly, this will be displaying our spreadsheet for the bills that we've been monitoring. Sorry, what was that? Nope. Okay. If you aren't already, please make sure you're on mute unless you have a question, then you can feel free to unmute and speak up, but just make sure we don't have any background noise. So I wanted to share with folks, let me see if I can change the zoom on this. Get everything onto one screen here. A little better. If I do this. There we go. So the first section here are kind of all related to bills that either create or abolish agencies and their current status as of today. Checked late this morning, so that should be fairly current. As you can see, all of these are currently in a committee that is not subject to the May 5th deadline, which was the requirement to have the work session scheduled for second chamber. So these are technically not dead, although I would say that, like for example, House Bill 2755 back in January, was referred to the Rules Committee, has had no action since. Considering the time remaining in session and the various budget bills and other policy related items, I would anticipate that many of those are not likely going to move forward. If we did see anything move forward at this point, I would probably say it's going to be 2976 that would establish the Oregon Spirits Board. That actually had a public hearing just a couple of weeks ago, so that one is still kind of at least relatively being looked at by that committee. So the rest of these, I would kind of suspect that more than likely we won't see much on, other than this last one here, Senate Bill 337, which basically moves the Oregon Public Defense Services Commission from the judicial branch to the executive branch. At least that's what the -A amendment does. That had a informational meeting on May 11th, so they're still kind of looking at what that would entail. But that again is in a committee that in a very short order of time could have either an additional amendment to it or move forward quickly at the end of session, just because it has had some recent activity. So in terms of bills related to collection processes, House Bill 2008 is probably one of the most impactful to agencies in terms of those that have the ability to garnish. It changes the garnishment exemptions, both from a perspective. Sorry, I was looking at had to admit a person from the lobby. So House Bill 2008 updates all of the different garnishment exemptions, whether it be homestead, personal property, wage. Wage is probably one of the most significant for the state. Increases it rather substantially. There is an amendment to that bill that has not been adopted, that kind of falls somewhere in between the original bill and the current statute. So I think it's still going to have some negotiation, but again, it's in a committee that does not have that same May 5th deadline. So I think they're still trying to work through that between both the proponents and opponents of that bill. As I've watched it, there's a lot of behind the scenes conversations going on with that one. We'll just have to kind of see where it all lands when it's all said and done, but I would suspect that it's in some manner will move forward by the end of session, barring anything that happens as it relates to the Senate walkout that's going on. So that could certainly throw a wrench in some of those things, but I would at this point suspect that with all the work that's been done, something would move forward at this point. House Bill 3119 has not had anything moving forward with it, so it probably is kind of a dead at this point, but is in a committee that could be raised at any point. But Senate Bill 228 has had some recent activity, has a work session scheduled tomorrow. That's related to Construction Contractors Board and some of their abilities to suspend licensing, et cetera. Senate Bill 424 has had recent activity, a work session on May 9th. I do suspect that this is going to pass in some manner. There really has not been any amendments to it, but has to do with a higher education secondary institutions not being able to withhold a transcript just because there's a debt owed. It's kind of been something that I think nationwide has sort of been a tipping point for a lot of the colleges and universities, and change in policy to not withhold that, because it limits their ability to get employment in some cases. So we're seeing that shift. 501, I suspect this is dead. Nothing has happened to it since it was referred to the Rules Committee. That would have established a public bank for the state of Oregon, although it had nothing to do with like state bank accounts. It had to do with like bonding or something like that, if my memory serves. But I don't think that it is going to move forward at this point. Senate Bill 538. This is one of a couple different bills that was associated with credit card fees. One appears to have failed. It was related to Dogami and an authority to accept credit cards. This amendment, or this bill and its amendment, says that if an agency essentially already has the authority to accept credit cards and does, that the agency would have the option of adding the credit card fee or passing that to the debtor, if you will, or not the debtor, the person that is making the payment to the state agency via the credit card, that they would be responsible for the credit card fees. And so while different folks had some different feelings about that, as I watched the hearings in committee, it does appear that it is moving forward. So we may see some future tweaks to credit cards and so forth in future sessions, but we'll certainly monitor that at that point in time. But if you're an agency that already is accepting credit or debit cards, this would specifically give you an authority to pass that fee or slash have the credit card company add that fee separate from the amount of the transaction, and thus not require the agency to have a budget for that administrative cost. Senate Bill 912 relates to employment department and how they can offset future payments from family and medical leave insurance benefits. That appears to be moving and is just awaiting the governor's signature. Same with Senate Bill 184 relating to child support. This has to do with the reporting requirements to the Department of Justice on essentially what is considered a new hire. Would now include anybody that is an independent contractor. So this would require in both the private sector and for government agencies that if you are using your contracting process and you enter into a contract with somebody that is considered an independent contractor, you would need to work with your HR department that currently would be reporting new employees. You would need to add this information to that list to be sent to the Department of Justice. That is, again, just waiting the governor's signature. And then finally, Senate Bill 981 has to do with when in 2018, I believe it was, when there were some other changes made, ORS 293, one of the outcomes from primarily a numbering perspective within the statute, but DAS no longer had the authority to, by rule or through the OAM process, to grant an exemption to the Department of Revenue for specific accounts from the assignment to a private collection agency. This is something that they kind of currently are looking at, things like if somebody has a garnishment issued and it's right before their 1 year time frame, they'll wait to see what the results of that garnishment is before they would send it to the collection agency. This is something that They do because it makes sense, not because DAS had the authority to tell them that that was okay to do. So this would give DOR the ability to request that as a formal exemption from their statutory requirement, just like other agencies can do from the 90-day provision as far from assigning debts to DOR OAA. We've had a couple of bills that have already been signed. I think we mentioned before, 2029 changes the font size for items recorded with the county clerk, minimum of 10-point font. So that is effective January 2024. So you'll want to start, looking at those documents if you were recording them and making sure that you're getting them updated to that minimum 10-point font. Senate Bill 309 has to do with the number of weeks notice to a decedent's estate, how long that must be published. That is passed and is effective January 2024. And then House Bill 2411, which dissolved the Alfalfa Seed Commission, that was signed on May 8th and took effect on its passage. So Oregon no longer has an Alfalfa Seed Commission. Then here are the bills that did not meet the first chamber deadline for work sessions. And then Senate Bill 222, which I mentioned earlier, had to do with DGAMI being able to accept credit cards. That had a failed vote in the Senate. So looks like at this point is dead as well. So that's kind of our update now. By the time we would meet again in July, I would hope that we'd be able to give you a final legislative summary since I believe June 25th is the constitutional sine die. So unless they come back under a special session, which is always a possibility, hopefully we'll be wrapping this stuff up when we discuss again in July. So any questions on the legislatively tracked bills related to AR? Hearing none. Close this. All right, moving right along. Some OAM updates and new policies that will be coming soon. Wanted to share with everyone. Let me see here. Got a couple of bills OAMs. Move this over. Okay, so the first one is 353030, which is the policy that defines liquidated and delinquent accounts. This had some updates, basically making it easier to read, a little more concise. It doesn't, redefine what liquidated was in comparison to the prior version. It's more just kind of for readability. Also providing some direction to agencies regarding the efforts that a liquidated and delinquent debt, when assigned to DOR, what type of actions that they can take. And so, this will look very familiar to you in terms of what a liquidated debt is and the various criteria. And so this is kind of where some of the new information is that we were talking about Debts assigned that were liquidated in the manner of D1 through 3, DOR can issue their distraint warrant, which allows them to garnish eligible property. DOR may be unable to issue a distraint warrant for anything that is 4 through 8. The recommendation is to follow the process for 1 through 3, if that is available to your agency, to ensure that DOR can use their warrant authority. And so this is kind of, again, it's nothing that we haven't already had in place. It's just kind of capturing that within this policy to make sure that it's hopefully as clear as we can, documented within that policy, so that when you are sending accounts to DOR, you can convey to them the manner in which it was considered liquidated. And let's see. Sorry, my mouse, the screens are backwards from what I'm used to. So next, 353090. This has to do with coordination of vendor payments. For those of you that might also do some payables within your agency, this is something that has been in place for a few years now, where debts that are owed to DOR for taxes, those, if they are also a vendor in SFMA, there's a nightly matching process. That vendor is deactivated with a code that tells you to contact DOR. That's where you then go through Revenue Online to notify them of a payment to make, and then they can issue you a garnishment, and then you process that garnishment once you receive it to apply or send that payment that's owed to a vendor, redirect it to the Department of Revenue to be applied to that tax debt. What these changes did is it also added language regarding alternative payment methods such as spot card payment. And now agencies that use a spots card and has a payment that they're going to make of $10,000 or more, that they would need to first check SFMA to see if that vendor is established, and if so, if it is active or deactive. And if it's deactivated, you don't make the payment with the spots card. You follow the regular process of vendor coordination. You go through SFMA to make that payment. The offset will occur, or the garnishment, I should say, will occur. And it's basically establishing that threshold of $10,000 to do that within the agency that is making a payment with a spots card. So we're trying to close the gap, because spots cards have increased in their usage significantly, especially since the pandemic came along. And so, but at the same time, not making it so burdensome or setting a threshold that is low enough that it's going to impede the normal operation of business, let's call it that, for an agency, and require a significant workload. $10,000 payment is generally pretty uncommon for spots cards. Not that they don't occur, but we're showing reasonable effort to the legislature to comply with the provision that we're not making payments to vendors that owe the state money. So that's what the changes to 353090 are doing. So I will pause there for a minute just to see if anybody has any questions on those two. These are both currently updated and posted on the OAM website. Any questions? Seeing none or hearing none. Okay, so we have a couple others that we wanted to at least share with you. The SARS manager, Rob Hamilton, is currently looking at some new policies that actually were kind of written a while back, but with the pandemic and lots of other things that have come up, kind of got pushed to the back burner a little bit. But wanted to kind of let you know that these are expected to be posted for agency comment sometime in the next few weeks. I can't give you an exact date. Just kind of really depends on when Rob has a chance to look them over and say that give us the green light to go ahead and post them for comment. The first is, and again, these are all draft numbers. So the final may change slightly, but what was being proposed is 35-20-40, which relates to obtaining and using social security numbers. You may be aware that ORS 293226 kind of already has some provisions about use of a social security number for debt collection purposes, what needs to occur for notification or authorization to use it for that purpose. There is an OAR 122-085-0200, which is the public rule associated with collecting an SSN for debt collection purposes. This is the internal agency policy, if you will, that matches that same language. So just trying to make sure that we're putting into the OAM the same things that we have in both the statute and the rule. So that is going to be coming, as well as 358010, which relates to bankruptcy, providing a very high level. It is not intended to be a in-depth bankruptcy set of procedures, but more of a general overall what to do when you are notified that a debtor has filed for a bankruptcy, including compliance with the automatic stay, which is part of the federal bankruptcy laws, and then when and processes for filing a proof of claim with the bankruptcy court, if that is part of that notification that would have come from the court. If you were listed as a debtor, a creditor, excuse me, by the person that has filed for bankruptcy, or the business, as the case may be, then you could receive a notice that there are assets and you would be submitting that proof of claim. Again, this does not go into specifics about what goes into the proof of claim. That is already going to be on those forms. It provides reference that, when to contact the Department of Justice for assistance with that type of legal advice, so to speak. So it provides that direction as well. One of the next newest one, or OAM, that would be coming out is 358020, and that is related to the Service Member Civil Relief Act. Many of you may already be aware of this as a general process for collections, but that is a federal law which provides restrictions on what can be done when a service member is on active duty, and what certain things are basically put on hold while that member is on active duty. You can't foreclose on their home, so to speak, those types of things. So there's a number of provisions that provide protections for the service member when they are on active duty and are unable to maybe make the same amount of income that they did when they were in their civilian jobs, and therefore, they're provided that relief until their active duty ends. There are the Service Member Civil Relief Act, in some cases, does apply to either a dependent or a co-signer. So this policy kind of just at least gives you a place to look if you were notified that somebody is on active duty, and kind of a place to know where can you look for more information. It's not intended to repeat all of the same provisions. It will highlight some of the things that will directly impact most state agencies, but is not intended to be a rewrite of the Service Member Civil Relief Act, but just again, we're trying to capture within OAM Chapter 35 things that are going to impact an agency in the collection process, and service member active duty status is certainly one that would apply in the case of with the Service Member Civil Relief Act. So, any questions on the new policies? Is my volume up? Okay, no questions there. Then just wanted to share with you as well some of the other things that are going to be coming out is OAM 356020, which is the ARPM. No changes to what is reported or anything like that. This is again an editing, reading for clarity type edit, not, formatting and readability only. No changes to the template or any of the data that would be submitted, just trying to make it a little bit clearer to read. So there are some edits that are coming out for that, as well as OAM 753513, which is a form. This is the form in an OAM 355010, which is the write-off OAM. There is a link to a sample form where the agency needs to document, self-document, if you will, why that account meets the criteria for write-off within OAM 355010. And so the form that is currently on the website is a very basic, who is the debtor, what is the amount, which criteria was it, and a signature from an authorized representative. The updates that were made simply added some instructional language to the top of that form, as well as on the back side of the form, a place for the agency to document the reasonable efforts that they took to collect on that debt as part of the identification that it met a criteria for uncollectability. So just again, kind of updating the form to try and make it a little more complete so that the documentation of that reasonable effort, which is a requirement of 355010, that the agency had performed reasonable effort. Now you have a place to capture what was that reasonable effort. You sent letters, you made a phone call, you sent it to DOR, they did their full life cycle. It was recommended for write-off, therefore this is why we're doing this. So that will be coming out as well. Again, just trying to make the forms a little easier. That form is not a required component. The documentation is a requirement. The form is a sample, provided that if you don't have any other mechanism, you can use that form for your records. Not to be confused with the annual certification form of the total write-offs that were completed that go with your year-end reporting. That is a totally separate form within the OAM. That is basically just where you're saying for a particular fiscal year, what was the total value of the write-offs, abated accounts, and who prepared it, and the authorizing signature that says, yes, you have done everything in accordance with the appropriate rules and policies. That is a totally different form than this one that I'm talking about here. So those are the updates on the OAM that wanted to kind of let everybody know what was coming and see if you had any questions on those. Again, the new policies will be posted for comment sometime within the next few weeks. When those do get posted, I will send an email out through the news list just to let you know that they are there. You can take a look at them, follow the process to submit any comments that you may have. But then after that is complete, then it goes through the internal process of being approved by the Chief Financial Officer, Kate Nass, and then we'll send out a notice when they become final and posted to the OAM site within Chapter 35. Any other questions or any questions on anything so far? Well, either I'm explaining things really well or everybody's taking their afternoon nap. I don't know which, but I'll take that as good news if there's no questions. And we are to the point in our agenda for a roundtable. If anybody has anything that they would like to ask or an issue that you're dealing with that you might need some information or somebody, another agency that might be going through the same type of thing, this is a chance to just kind of bring forward any topic that's AR related. None? Everybody must want to go outside and go for a walk or something. Okay, well, seeing none, I will again give you some time back. Just as a follow-up from the beginning of the meeting, if you joined and you are listed as a guest or your first name only, please add your full name to the chat so that I can have that captured for the minutes. And let me see here, get to screen. The next ARC meeting will be on July 18th at 2 p.m. So thank you very much and have a good rest of your day. Let's see, we got a question. Rabbi at CCB. For unassigned 90 days due for year end, is that, my screen moved on me. Okay, Rabbi, so for unassigned accounts, 90 days due for year end, is that what accounts will be left up to June 30th? So, Rabbi, are you still on?
Yeah, yes.
So for the unassigned 90 days due for year end, is that, so in the LFO reporting, you're going to report all your liquidated and delinquent accounts and their current status, assigned or exempt. And then there's two fields. One is the unassigned non-exempt. Those can be accounts that are, for example, on a payment plan. You are getting payments, but they are not exempt and they are unassigned because they've been making those payments. Of that number, you would then report if there were any accounts that were unassigned, non-exempt, and have not had a payment for more than 90 days. Because the statute says that once you reach 90 days without a payment, it is subject to assignment to DOR. This is why I was mentioning earlier in the preparation piece that if it's going to be subject to the assignment, you want to get that done prior to June 30th so that you can show that it was assigned at least by that date. And then you would, in the LFO, you would report it as an account that was added to the DOR inventory. Does that make sense?
Yeah, so what I understood that, so the date will be June 30th. If by that date they are not unassigned or non-exempt for 90 days, those accounts I will count as that category. Otherwise, if like prior month, if it's already sent to DOR, but it was 90 days due in other month, but it's not present in our agency, that it will not be, it's not sitting unassigned, then it will not be counted as unassigned. So let me just repeat. So if suppose in February it was 90 days due, but in June already we sent them, then we will not count it as unassigned 90 days due for the year-end report.
Right. When you use the reporting worksheet, the Excel file,
Mhm.
if you've got it at DOR or it meets an exemption criteria, it will automatically take that out of the unassigned non-exempt number. And so the more that you have in those categories, the smaller that unassigned number will be. And then it is okay from a, you know, policy perspective, if you will, to have an unassigned non-exempt account because you're getting payments within at least every 90 days. Once it becomes more than 90 days without a payment, that's when the statute says you must assign it.
Mhm.
And that field is what, in that reference in the statute to report that value, is what I call the self-shaming statute. You were
Okay.
supposed to have assigned it, but you didn't. And our goal is to try and get that number as low as we can to show that agencies are complying with the provision that says you need to assign the accounts once there's been no payments for 90 days. You can assign it before the 90 days.
Mhm.
Once it's liquidated and delinquent,
Mhm.
if you've given them all the other chances to pay, you can send it, 3 days afterwards. But if 90 days go by and you don't get a payment, the statute says that it's supposed to be assigned to the Department of Revenue.
And if we find that prior years we have been reported wrongly because we were getting wrong numbers from the system, but so we are trying to reorganize those numbers and seems more true numbers right now. So we cannot go back for the old beginning balances, right? So we can
Yeah,
go
so
forward.
those are point in time. Those are as of June 30th of that prior year. So if you have corrections that you're making
Mhm.
to your Section 2 data, for example,
Mhm.
your account's outstanding, and therefore in your LFO worksheet, you're going to have those corrections made and then report what is actually assigned to DOR or what is actually exempt as
Mhm.
of June 30th this year. You're going to have a new point in time for June 30th of this year of what's
Mhm.
unassigned non-exempt. So you don't have to worry about what was the number in a prior year. Focus on the data within the Section 2, Section 3, Section 5, and then that number will kind of clear itself when you're reporting of those for this year,
Mhm.
unassigned non-exempt, how many have not had a payment for more than 90 days. Hopefully, if you've gotten the assignments done,
Mhm.
then that number will be 0.
Okay.
We can have a follow-up on that. If you start looking
Yeah.
at your
We
data
need
and
to
you got
talk
some
to you later.
questions,
Yeah, we
more
have.
than happy to have a
Yeah,
separate,
sure.
conversation
Mhm.
with you on that to help you figure out how do you go from what your number was last year to get to the number you need to be this year. More than
Mhm.
happy to help you out with that.
Yeah, sure. We will contact you.
Yep.
Thank you.
Any other questions that I might have missed in the chat? Don't
Gerald,
see
looks like
any.
Anna Unger
Hi,
had,
yes. I had a
I just
question
got to
about the
that.
repayments.
So agency transfers are delayed for payroll overpayments. What should we do if we know a payment is coming but will be applied to an AR later than expected? I
Can
have
I
no
add to
idea
that?
when
I'm
agency
sorry.
transfers will be more regular. I think part of that's a number of things, whether it be budget or staffing issues, could be a combination. So for one thing, if it's an account owed by another agency, you would report that as exempt in section 5. And so that's going to not be counted as an unassigned non-exempt account because it is exempt from the assignment provisions because it is owed by a state agency or even local governments. Local or federal governments are also exempt from the assignment provision. So does that help?
Yes, I
You'll
was
still
going
carry it
to
on your
add to
books,
that.
but
No, I was going to add to that when I follow up with our payroll analysts. Let's say they set up a payment plan, someone was going to be done with their payment end of February, but I still didn't get any payment. What I'm hearing is that Workday keeps dropping, even though they keep setting up deductions every month, Workday keeps dropping. So I am kind of seeing a lot of delays as far as payroll overpayment collections go. That's one thing that I'm noticing. And I will just, I guess, leave a note in my reporting, put a note about that.
so is this related to the Workday
Yes, it's due to
system
the
issues?
transition. Now they started moving all the deductions to Workday and it keeps dropping and they keep adding every month. So I'm hoping I notice some difference, but I know the past few months have been an issue for us.
So I would say as it relates to some of those Workday issues, the other question that you got to ask yourself and whether it becomes subject to reporting specifically for LFO purposes is whether it meets the definition of liquidated, which means you have notified them, you've given them a chance to appeal, that type of thing. If they've already agreed to a repayment plan, and you have that payment plan, then yes, it is a liquidated debt. If they stop making the payments for more than 90 days, it does become subject to assignment. If the agency has simply notified them that there is this error that occurred and they're doing a reduction of future payroll, based on, I think the union contracts have limitations as to how much that can be. Typically, you would be seeing those reimbursements at least start to be applied or a form of a payment plan within a 90-day period. So unless the agency has stopped doing that because there's some other system issue, you would still report it as a liquidated and delinquent debt, an amount owed from a current or former employee in section 4, but it may not yet be subject to the assignment requirements. So I think it kind of depends on why has there not been anything for a 90-day stretch.
Thank you.
Scroll through the rest of this here, see if I'm missing any others. I think that was it. So unless anybody has any other questions, we will see everybody in July. Thanks for coming.